Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the Nasdaq Composite Index, the Nasdaq 100 Index, and we'll also look at the Nasdaq Equal Weighted and the Nasdaq 100 Excluding Tech Index to just get a feel for what the market's doing and where the support and resistance levels are. Now, we've had a last couple of weeks, we've had a fantastic rebound here from the bottom end of the Ichimoku cloud. That's a classic, beautiful rebound there. Got through the turning line and standard line Ichimoku cloud, gap back above the top end of the Ichimoku cloud, so it's back in bullish territory. As long as price action stays above the top end of the Ichimoku cloud, the market's bullish, so watch out for that. Any price action below here is a bearish sign, so it's pretty much binary. It's either above the cloud or bottom of the cloud, and then we know when it's bullish or bearish. Now, the market's currently struggling to get past this June high there. You can see it's not quite getting past there. We've got the other target there, the old highs up there to also to look forward to. So we do need to see a bit of a stronger rally towards those levels. If the market starts to rotating and starting to show weakness, we could see this top end of the Ichimoku cloud being tested. And if we slice through that and enter bearish territory, the downside risk targets is the standard line of the Ichimoku cloud, the bottom end of the front end of the Ichimoku cloud. So we've got these two levels as downside targets on the composite index. So in view of seasonality, we could still see this top end of the Ichimoku cloud being tested. Now, the risk is still on the weekly Ichimoku cloud. We can see we're still quite far extended from the top end of the cloud, and we've not had a much deeper correction like we've had here between this cycle here, the May to April move there. So we could see that we could still see a retest of these lows. Key levels to watch out for, let me just zoom in here, is the turning line Ichimoku cloud. That's the first level of support. Second level of support to be tested is the top end of the front end of the Ichimoku cloud, that zone there. And then the turning line, the standard line of the Ichimoku cloud. So these are the downside, these are three downside risk targets if we get a much deeper consolidation back down towards the top end of the Ichimoku cloud. But on a weekly chart, still need to get past that high there. So the market is struggling to advance, but at least we got a rebound from the turning line there, as well as the top end of the front end of the Ichimoku cloud on the weekly. So we do still have the old high as an upside target. But back onto the daily chart, watch very closely to see if we get a breakout past that level. Watch out for the gap to be closed, and watch out for a particular potential rebound rally from the support when the market corrects back down to the top end of the Ichimoku cloud to test that zone. Next up, the Nasdaq 100 Index. Also had a fantastic rebound here after a very deep correction there. Fibonacci levels were hit to the downside. Strong rebound there. Struggled to stay above the top end of the Ichimoku cloud. We've got these old highs as resistance targets to look forward to, but so far the Nasdaq is fighting hard to remain back above the top end of the cloud. You can see we still got a lot of water torture going on here between being in the cloud and being on top of the cloud. But we had a very strong rally in April, May, June until beginning of July. Then we had a nice big correction, digesting this huge move back, Fibonacci consolidation, rebound from a critical Fibonacci level, as well as the bottom end of the Ichimoku cloud, and now we're fighting hard to break past the top end of the Ichimoku cloud. Downside risk levels is the top end of the front end of the Ichimoku cloud. So that could be a downside risk target, 28,947, as well as the bottom end of the Ichimoku cloud there. And you can see that coincides well with the standard line there. So these are the downside support targets. If the support fails at the top end of the cloud, we could easily dip back down to test those support levels and then continue a rebound rally from there. So the Nasdaq is not quite in a good shape from an Ichimoku cloud chart perspective. Looking at the weekly, you can once again also see it's quite far extended. And then if we now just look at the top end of the Ichimoku cloud there, got a rebound from that zone, as well as the bottom end of the cloud. That's a support zone there, so watch out for those levels to the downside on the weekly. Still quite extended from the top end of the cloud, where we look at the price action versus the top end of the Ichimoku cloud. We actually built an indicator that gives an idea when the market's becoming too extended from an Ichimoku cloud chart perspective. So watch out for these are the downside risk targets if the market starts to roll over on the daily Ichimoku cloud. So we've got those three downside upside targets in the market if the Nasdaq fails to maintain its price momentum above the Ichimoku cloud. Now looking at the NDX index, the equal weighted index there. There's Nasdaq 100 equal weighted index. Let me just get there. There we go. There we go. That's much better shape than Nasdaq 100. The equal weighted index is now very close to the upside resistance targets there. We can see these all highs there, trying to get past that, as well as this top end there. So the equal weight index much better shape than the Nasdaq 100, and we can see we did not have a very deep correction. We did manage to rebound from a mid-cloud support zone there, with the bottom end of the front end, the Ichimoku cloud, as critical support levels there. So keep these levels in mind. Need to break past these old highs there for the rally to continue. If the resistance holds at these levels, we could dip back and retest the top end of the Ichimoku cloud for support. So these are the downside support targets if the market rolls over after the top end resistance levels became too strong for the market to maintain. We're also going into August, September, October seasonal week period, so the market could come back and test the top end of the Ichimoku cloud and then rally into the year end to make another attempt at breaking out from that trading range. The NDXX, which excludes tech, fantastic there. We had quite a couple of months of a bear market there, and then we had a beautiful cloud chart cross, confirms the new bullish sign there. Bit of water torture back and forth here with the Ichimoku cloud support, but now off to the races, and now the index is getting very close to the old high resistance target there, so getting close to the upside target there. This comes soon after breaking past this cloud chart resistance level, so it got to that target as well there. And now getting very close to the target, 6,220 for the Nasdaq 100 excluding tech. So much healthier market there. So that one is still bullish, whereas the Nasdaq 100 struggling a little bit to advance, but the Nasdaq 100 excluding tech is still in very good shape. But just keep a close eye for the price interaction at that resistance level. Also a little bit extended from the top in the cloud, but we'll see support zone will be when the turning line and standard line catches up, and leveling out at that 6,100 should be a new support zone in the Nasdaq 100 excluding tech. But back to the Nasdaq Composite Index, downside risk to the top end of the Ichimoku cloud. This resistance level seems to be holding right now. If the earnings season can't get us to break past that zone towards the next upside target, we could see a downside consolidation to the top end of the Ichimoku cloud, with significant downside risk to the standard line and the bottom end of the front end of the Ichimoku cloud. Thank you for watching. Until next time, happy cloud chart trading. Bye for now.